when something is the first anything is big. First woman, first African American, first Latino, Latina. When something is a first, is always a big deal. But this brother has the first African American owned AI powered ETF listed on the New York Stock Exchange. So we definitely going to dive in and talk a little bit about that because, hey, DFD Creative Media, we may want to go public one day. So I need to know a little bit of the details. So I'm going to go ahead and tag him in so he can introduce himself, get started. Make sure y'all hit the like button so we can get this video out. And if you got any comments, feel free to leave them in the chat. What's going on, brother? How you doing today?
Marcus, what's going on, man?
Hey, man. Blessed, champ. Blessed, man. How everything with you?
Another beautiful day. I'm in Jacksonville, Florida. It's raining though, like it does every single day in Florida. But man, I can't complain. I woke up this morning, so we good. We good.
That's dope, man. I know I got to go to Orlando on the 7th, man. I'm going to this finance conference for finance content creators. So it should be interesting. Hopefully, it ain't too damn hot out there.
Hey, so
go ahead.
Like tacos? Do you like tacos?
Yeah. Of course.
Yeah. Okay. It's like I mean, they're not black owned, but still, like, it's a company called Taco Lou in Orlando. That is based in Orlando. They got the best tacos, man. So you got to check them out. It's called Taco Lou. You got to check them out.
I'm gonna check it out, man. My wife from LA, so I got ingrained into the fine Mexican cuisine early on in the relationship. Yeah. So let's go and get started, man. I already kind of gave an intro, but nobody can introduce a person like themselves. Go ahead, tell us a little bit about yourself, a little bit about your background, what you do, brother.
Yeah. So Mario Payne, I'm a certified financial planner. I'm a fiduciary. I've been practicing for 15 years, my 15-year anniversary. So time flies, we're having fun. I'm born and raised in Cincinnati. So all my Bengals fans, who they? Great time. My team went to the Super Bowl, man. I was there in the building, but we lost. So that was not fun, but it's always next year. I graduated from Tennessee State University, so definitely support to our HBCUs. I'm actually on the college alumni board, so we actually help individuals, who graduated from TSU get jobs. It's pretty cool, a way for me to get back. I also was in the military. I'm a reservist. When the war started in 2003, I was in Kuwait, not in Iraq. Loving out a fighter. So anybody who's I'm gonna get you sucker, Keeping Iron Wayne's, his job was my job. I just push papers, you know what I'm saying? So, but everybody got their job. So salute to all the veterans out there. So then I've been here in Jacksonville ever since, man. So I graduated from Tennessee State, came here in 2006. For about 6 years, I was with a company called Edward Jones holding the story before that. But when I started my investment route was with a job with a company called Edward Jones. I did that for 6 years. And then I had like an epiphany in 2013. I was like, man, I'm starting to, I'm getting referrals, saying? Everything is good. But people are, coming, but they don't know who Edward Jones is. Man, Edward Jones is dead. Like, people come to see me, not Edward Jones. So I had an epiphany, like, let me just start my own practice. You know what I'm saying? So I started my own practice, man. I bought my own building. And that's been rock and roll ever since, man. Became a certified financial planner 2012 and a fiduciary. Then fast forward to now, my business partner, the founder of the tech company that I co-own, Anthony, he graduated from FAMU. He came up with a great idea. It's like, man, you're doing all this stuff in your practice. He had like an algorithm that he created where we get people into the market when it's down and get you out when it's high. It's easy, right? Buy low, sell high. Oh, everybody does that. No, they don't.
Right.
You know what I'm saying? So man, he just came up with ideas like, man, let's basically put this algorithm, let's turn it to a fund. So through my practice, we kind of created it. He spearheaded everything, and then on Black History Month this year, we have our own fund on the market. The first Black-owned ETF or AI-powered, artificial intelligence-powered ETF ever to be on the market. We created a company that now allows other financial advisors or influencers or athletes to start their own fund. So if a person wants to start their own fund on the market, they can go through us to do that without having to go through the 2-year headache that we had to do to do it. Actually, we have a soft launch September 1st. So that We basically have our own investment app, just like Robinhood, but it basically makes sure that you don't make dumb mistakes because
Right,
83%
right,
of investors on Robinhood lose money. So we have
right,
things
right,
in
right.
place, man. So that's a long introduction, but definitely, man, just from a technology standpoint of what we got going on, just extremely blessed, and hopefully, I'll be able to empower our community in a positive way.
That's dope, man. That's dope. It's funny because I said in the intro, I said this the man I need to talk to just in
Yeah.
case I ever decide to take DFD Creative Media public.
Oh yeah, now we can do that. Yeah, and the words a little flip. I can do that. You know what I'm saying?
Right. All right. So when we start off, bro, I always like to just kind of get a little bit of background, man, because we all run this race called life, but unfortunately or fortunately, depending how you look at it, we all don't start at the same place. You know what I mean? Everybody's
Yeah.
situation is different. So tell us a little bit about, when you came up, how was money conversations, how was it discussed in your household? Was it something that was common? Was it a rarity? Where did you get that foundation of financial knowledge from? Did it come from the home or school or what?
Yeah, so I was blessed, man. Like, saying I had my mom, saying she had a job, she was working. My stepfather took me in like a son. Saying he worked blue collar, he worked at Ford. So everybody in the Midwest, they know Ford, GM, Cadillac, saying. So he was on the assembly line working, busting his butt, man. So it was good. I definitely had a good financial upbringing. The other side of my family, on my real father's side, I definitely saw what poverty looks like. I saw
Mm-hmm.
what bad financial decisions look like. So I was able to up kind of see what good business decisions and good decisions are and what bad decisions can lead you. So kind of seeing kind of both sides of my family, I was able to kind of see what I need to do, how I need to save, how I need to budget, and kind of how to kind of live a nice financial fiscal life. I wouldn't say I was in a situation where, we was eating ramen noodles and things of that nature. Definitely not the case. I was extremely blessed.
Right,
My
right,
mom,
right.
and my stepdad, who was my dad, but they bust their butt, to help me go through college. I was the first person to graduate from college, so in my family. Um,
Dope.
that was well, on my real father's side at least, and on my stepfather's side as well. But yeah, so it was great. Also, they instilled HBCUs. My mom, she started at an HBCU. She graduated years later. But she started at HBCU. I had an uncle that graduated from Tuskegee. So definitely from an HBCU standpoint, it was definitely ingrained in me to definitely support our people from an HBCU standpoint. So that's why I made the decision to go to Tennessee State. Best decision I ever made in my life. To be honest with you. So, but from a financial standpoint, man, I definitely was able to see the good and the bad from a finance standpoint.
Right, right. That's good to be able to have both sides like that. You know what I mean? So you were
Yeah.
aware of, what it could be depending on decisions you make that could take you this direction or this direction. And
Yeah.
hey, I like talking to you too because you in my age bracket, man. No offense to any other guest, man, but I can make a joke and you gonna get the shit.
Of course, of course, of
I
course,
was
of
like,
course.
you're in my age bracket, former military guy. I was like,
Yeah.
yeah, I like this brother, man.
Yeah.
So, but I definitely feel you on the HBCU thing too. Hey, HBCU for undergrad, HBCU for law school. I actually feel that HBCUs prepared me for the challenges I would face. I remember telling the professor, I think I want to become an attorney. And he was like, oh, if you want to become an attorney, it's a guarded profession. So be prepared to deal with A, B, and C. And lo
Mm.
and behold, it was things I saw. So I'm definitely there with you on the HBCU side of the game. Yep, yep. So
Yeah.
we're talking generational wealth, right? Now, give us what is your, because everybody, when you hear these terms, financial freedom, generational wealth, you always you always have like you always have different interpretations. I know I'm looking
Yeah.
at that comment.
Yeah. It's all right. It's all right.
Hey,
It's
leave
all
us,
right.
leave us, leave
I know
us
you. Look, I got the
receiving.
gray hairs, man. Come on, but I
But
old man, forever young, man. Forever young.
hey man, 40 the new 20. That's what
Yeah,
Jay-Z
facts,
said.
fact. Yeah, yeah. Man, I just turned 40. So actually, I was in DC a couple weeks ago, man. My one of my real good friends. We have an HBCU podcast together, man. So he just turned 40, man. We just had a good time. So yeah, man, 40 is a new 20, man.
Definitely, definitely. And so, when we talk about these financial terms, they mean something different to everybody. You know, financial freedom is something different for me than it is for you or somebody watching. And just like generational wealth, when I think of generational wealth, this is my definition of it, how I define it for me. And I look at generational wealth is if we're all in this life, and life is a race, right? And the start line is right here. Generational wealth to me is putting your family in a position where they starting ahead of that start line. Now, and the reason I define it that way is because it's not a set amount. Like a person could make minimum wage, but if they were smart enough to have a life insurance policy 10 times their salary, when they leave this earth, they gave their family generational wealth because they're going to start ahead of where the last generation started. So I don't really look at it as, oh, I want my great grandkids to have $5 million that Pop left them. Hey, I just want to put my kids and their kids in the position where they could be ahead of where I started. So how do you define generational wealth, since that's what we're talking about? What is it to you?
Yeah. So first off, I always like to give real numbers and information, right? So you think about an African-American household, African-American inheritance is $24,000. So like literally when a person passes away, they pass down about $24,000. Caucasian household passes down on average 125,000, right? That includes life insurance, assets, 401ks, retirement funds, and houses. So already right there, when we think about generational wealth, getting millions and millions of dollars, swimming in a swimming pool of coins like Scrooge McDuck, you know what I'm saying? We was watching DuckTales, like it just don't happen like that. You know what I'm saying?
Right.
Yeah, it is what it is. No, it ain't what it ain't when it comes to that. So I think we should definitely be more realistic. So from a generational standpoint, it's you busting your butt, working hard, making sure that you're not passing down debt, right? Because if we have debt, then it's like that hamster race where we just kind of continue to rob Peter to pay Paul, or not rob Peter, but continue to pay Paul, right? So that's my thought about generational wealth, is setting yourself up and setting your kids up so that they don't have to go through what you have to go through. So that means if you pass down $50,000, but they get a house that's almost paid off, I think they'll be pretty happy with that. Right. It doesn't mean that it's hundreds of thousands of dollars. So we look at Instagram, we look at YouTube, we see all these success stories. Half of it's cap. I mean, that it is what it is, because if we lie on YouTube, saying the bar association ain't come after you, unless you do something egregious, what I'm saying. But so like it ain't no governing body, saying. A lot of times there's a lot of sales stuff too, saying nothing against anybody who does a masterclass, by the way, but it's just so much fluff out there, buy my masterclass, get generational wealth. It just doesn't happen like that. So I think if we just look at it from a factual standpoint, as long as you're making sure that your family, your children, your loved ones are in a better position when you're gone than what they were before you passed away, per se, I think you're doing a good job. Also, it's different stuff for different folks. Like so you got one person who is rocking and rolling. Like if you ask Floyd Mayweather what generational wealth is, his thought process, and a person who just became a millionaire is two different things. You know what I'm saying? Even though a person being a millionaire passing down $1 million to their family is still very, 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 very good. It's just different. I mean, words of Meek Mill is different levels. So you got to take that in consideration too.
Yeah, I know. I think that's a fair point, and I think that's a good point you talk about, because I mean, we got to keep it a buck. There's a wealth gap that exists between African American households and non-African American households. You know what I mean?
Of course.
And it's crazy. If you actually go look at the numbers, it's actually it's such a large margin that sometimes a lot of people feel like it could be insurmountable. And so when we're talking about generational wealth, right, we all know we like to start from the basics. You know what I mean? Let's keep it at the most simple level for the folks who just starting out, and then we'll move the conversation up a little bit. But what are some of the things, if you were giving somebody some gems, hey, if you want to build generational wealth, and I know you talked about debt, avoid these 3 or 4 things. If you could avoid these 3 or 4 things, and then after you touch bases on that, we're going to talk about, and if you avoid these 3 or 4 things, and if you do these 3 or 4 things consistently, you'll be making progress. So what would be the 3 things that, hey, if someone wants to build generational wealth, and they're that person who's looked at as the oddball, they're that person who, hey, you're going to be the person who has to break the generational curse of poverty, of not having higher education, of making bad financial choices. What are the 3 or 4 things that you would have to avoid to go in the right direction to generational wealth, in your opinion?
Yeah. Debt, invest, right? I say debt twice. I say debt twice because we got good debt and bad debt. So that's why I say debt twice. So like no credit cards. Like
Right, right.
us as a community, it is what it is. I'm guilty of it. I went to HBCU. I was styling and profiling with no money in my pocket, but I was looking like I was, you know what I'm saying? I had swag with couldn't even have a G in my pocket, but I had the swag though, right? So
Right.
so we get into debt, and credit card debt is bad debt. If you got a credit card that's 20% interest, right? You spend $1,000 on something over the course of a year, it costs you $1,200, right? So I'm paying something that's $1,000, but it really costs me $1,200. I can't get busy with that. It just makes no sense. You know what I'm saying? So that's bad debt. So we want to stay
Right.
away from credit cards, but we do want to establish. We want to have good debt. Good debt is house payment, right? You know what I'm saying? In
Right.
most situations, we're able to write that off. If we have a business, having our own building, I'm blessed to have my building, right? That's good debt. Yes, it's debt, but I'm able to write it off. I'm able to then have my extra money grow, which is the third
Mm-hmm.
thing, invest, right? So when we have extra money, we want to invest it. So if we don't have the bad debt and we don't have these credit cards or these personal loans, then the money that we do have in our pocket that's extra, we can then invest. So we don't
Right.
invest it in something crazy like a barbershop or a hair salon. Nothing against a barbershop and a hair salon. However, though, with a new investor who just getting money to their pocket, they would invest stably, like into an index fund, like a mutual fund, an R ETF let be, for instance. So
Mm-hmm.
that's I say debt, invest. So you want to get away with the bad debt. You want the good debt, like a house per se. Even student loans. I know a lot of people are happy with President Biden about what he did. You know what I'm saying about $10,000 to $20,000 of student loans being forgiven, so that'll help. But then also from a student loan standpoint, it is good debt because you do get to write out the interest. So it's basically an interest-free
Right. Right.
loan. Whatever interest you pay, depending on your tax bracket and your income, you do get some of that back. So that's good debt. And then of course
Right.
investing. So those 3 things will help you curve, the curses that sometimes we have in our community where we're passing down debt and passing down lack of assets from one generation to another.
Right, right, and that's a good point. It's funny because you answered the question. I was going to ask how you classify student loan debt. You like that's my next live. My next live is literally going to be titled "College is a Scam. Prove Me Wrong." Because in 85% of in my opinion, in 85% of the time, if you go to school and don't pick the right major, if you go to school and get loans and don't graduate, you're just setting yourself up to fail. So I was going to ask you that. So I'm glad you touched on that. But I think the other thing is,
Now, Marcus,
go
I
ahead,
do
go
want to
ahead.
say because I'm biased, right? I mean, so I am on the College of Business Alumni Board at Tennessee State. So I can say for me now, again, different strokes for different folks. Like for me, even though I went to college, my major was business, so I do business now, so that helped. But like, I learned so much more from like a socialization standpoint, social aspects standpoint, than anything. So definitely, like the classes sometimes is redundant. Like you learn so
Right,
much
right, right,
about your career and what you
right,
got going on from experience. So I 100% understand that. But like definitely the socialization of it, man, like navigating through situations, especially going through HBCU, like navigating through situations like the entrepreneurs, like so back when I was in school, my homeboy was burning CDs and I was selling them for $5, like just like the entrepreneurial finding out stuff, finding about myself, like what
right,
sales
right, right,
tactic works, what doesn't work, saying 2 for 10. If I do 2 for 8, more people's gonna buy 2 instead of 1. You know what I'm saying? So now I have a less profit margin, but I have more volume. Is that better? Like so some of that stuff I learned, on campus. So definitely yes, it's a lot easier for you go on YouTube and find careers and not have to pay for college. I totally understand that, but I don't know if you can put a price on the socialization of it. Uh, so,
yeah.
uh, so,
And,
so
and
yeah.
that's a fair point. That's a fair point. How old were you when you went into the military?
Yeah, so I was in the military and at college at the same time. So I was a weekend warrior. So I joined the military when I was 18. I did basic training between the summer of going to college. So I did college, did my AIT in between my freshman and sophomore year, and then I was in the military, doing my weekend warrior type of situation before I got deployed. So I was in at 18. I got out at 22.
Okay. See, my route was I graduated, went to college for 2 years, and I was like, to hell with this. Then I left, went active duty for 4 years. And so I
Okay.
do agree with you. I think the socialization part of college is a big deal. But me going away, being active duty, and I was a little bit older. I was 20 when I went in. So I saw people who parents signed a waiver at 17, 18.
Mm.
I think the socialization aspect that you can get, you could potentially get it from somewhere else depending on what environment you're in. You know what I mean?
Of
Even though I
course, of
don't
course.
discount, like I said, I got some gems. I could think of 4 or 5 teachers in my undergrad who were really major influences on my ideology, how I move as a man, how I move as a father, how I moved as a professional. So those instances come in, but that's just it's just one of those things where I see far too many times. And I had teachers keep it real with me. I remember I wanted to be a computer science major, right? I don't know if I ever told this story. I wanted to be a computer science major. I was like, yeah, they getting that guap. I'm gonna go get a job down at
Yeah.
this back when like the little corny.coms was out, like Ask Jeeves. I was like, I'm gonna go get a job at I was like, I'm
Throwback.
gonna get a job at Silicon Valley. So I
Yeah.
I'm taking computer science courses. After a couple of semesters of C++, I was like, man, I'm sure I'm getting a lot of D's. I was like, you know what? This ain't the route for me. So I literally
Yeah.
looked at my homeboy who plays sports, and I was like, what's your major? And he was like, criminal justice. I was like, I'm gonna do that shit.
Yeah. 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 Yeah.
I literally switched my major. And when I went and talked to my advisor just kept it so real. They was like, if you want to switch to that major, you could do that major blindfold. Because I got damn near photographic memory. If you saw how I study, you'll be like, this dude's a weirdo. I literally read something, throw it away, and I would write it all out on the board. And I'd be like, all right, I got it. On to the next subject. But they were so honest in that if you get a criminal justice degree and you want to make this or have this level, you got to either go to law school or pursue a master's or a PhD and go in academia. And I don't know, my thing with school, I can speak for HBCUs. I don't know if everyone is getting that. One,
Right.
I feel like they're giving it out at HBCUs because I mean, like, dog, in law school, I got a full scholarship just because I did good. That
Wow.
only happens. That only happens at a black school. I didn't apply for
Yeah.
nothing. My wife got something in the mail, and she was like, "It says you got a full scholarship here for tuition," and I was like, that was a mistake. I literally called the school and was like, I think y'all sent this to the wrong Marcus. That's exactly what I did. The dean called me back and was like, nah, we had some extra money. You took care of business this first year. Like, I think that only happens at HBCUs because they were like, a lot of what happened was a lot of people who perform well, they would transfer to Duke or they would transfer to UNC. So they was like, nah, if we got people who doing well and we got extra money, let's reward them. So I do agree that HBCUs give you a little bit of seasoning, but
Yeah.
I think as a whole, when my son come to me, if he come to me talk about a history major or
Oh
something
yeah.
crazy
Yeah. Yeah.
like
Yeah.
that, we gonna
Yeah.
have a real like of all those majors. I feel like 70% of them we can say we gonna put 70% of them in the don't fuck with them category.
Oh nah, you true. And college is getting a hold of that. So what they're doing now is like, like your English 101, your math 101, 102, like those core classes you take the first 2 years to, like they're allowing you now, if you in high school, you can basically like take your algebra, your history, high school, take a test. And if you do if you pass out of those tests, then you're saying you go in, not have to take those core classes, because they know a lot of people don't want to pay for those 4 years. They just want to do, their business classes, or those 2 classes. That's whatever their concentration is. So
Right.
definitely, if you have a child that's in a sophomore, junior, senior in high school, definitely have them take those advanced classes, take those harder classes so that they can
Right.
pass out. So if they take tests and pass out, then they don't got to take those core classes in college. So basically, those first 2 years you don't got to pay for because you don't got to do the English 101 or the English or the history 101 or 102.
Right. And that's what I said. I got a mentee. He went to, I think he went to A&T. Young brother was interning me. My first job as a defense attorney, and he ended up going to A&T. He got a job as Google. I knew the guy was smart as hell. He was in high school, and I was like, damn, this dude way smarter than I was. He make me look like an imbecile when I was here. But he was telling me now, like, Google is kind of, those companies out there, Silicon Valley, are actually kind of turning away from the 4-year degrees, and a lot of new people just kind of got like certificates.
Yeah, the boot camps,
the boot camps, coding boot camps, and stuff like that. So that's dope. So I know you said debt, and invest. So let's talk a little bit about debt, right? Because with debt, debt is always one of those weird things, man. Because I think debt, how we interact with debt, or most people interact with debt, is so much a mentality and a way of thinking, right? And this is the perfect example I use, right? Because we know people just, you make 100, you want to spend 120. So we know in the United States stays less money per capita than any country in the world, but they're the wealthiest country in the world. So these are just real stats that's out there. But we know we should avoid debt, but mentality wise, we always push consume, got to have it now, that instant microwave. But the other thing is, like, we know we should invest, and everybody want to buy a house when the prices are down. Everybody want to buy gas when it's cheaper. When you go buy groceries, you want the groceries to be on sale so it's lower. But when people look at the stock market and see the stock market buying bad and stocks are lower, nobody want to buy it.
It's crazy.
Think about it. You want to buy everything when it's cheaper because it's beneficial to you. But when stocks are cheaper, people are like, I don't want to invest because the stock market's doing bad. So it's a mentality that we have. So let's talk a little bit about, what was an influence for you or either people you work with, since, investment firm, you deal with finances, that kind of changed people's mindset and got them from that ideology of consuming and having to have it to let me acquire assets, let me save, let me not. What changes that mindset? How do you get that mindset to change? Because if you can't change it, I can't remember the quote, but it's something like, if you can't change your mind, you can't change anything. And that's a true quote. How do you change that mindset?
Yeah, you got to go through the process. So, like, until you invest, until you buy low, high, until you actually see some of your money grow. First thing. So I always say you got Bill Gates started with $1. Warren Buffett started with $1. I mean, any famous investor out there you know of, or millionaire, they all started with $1. So you just have to get out there and invest. The not so good thing about investing is that we have the psychological FOMO, right? The fear of missing out.
Right.
So 84% of African Americans, think about this, 84% of African Americans, if they lose on their first investment, it takes them 12 to 18 months to invest the same amount of money again. So, you know what I'm saying? They got a bonus. They got $1,000. They invest in GameStop last year when GameStop was high. You know what I'm saying? GameStop goes down by 80%. They lose two different ways, right? I got $1,000. Now it's worth 200. I don't want to invest no more, right? And then a year and a half later, man, GameStop went back up. So now I got another bonus. Now I got another $1,000. So now I buy GameStop again for the same $1,000. It goes down again. It's like, what am I doing? So you lost money two different ways, right? You lost because when it went from 1,000 to 200, you lost $800. That's gone, right? And then you buy it again at 1,000 again. So you spend another $1,000, right? So it's like you missed that little $1,800. It makes no sense. Because of that FOMO, though, people just don't invest. So even though you want to crawl before you walk, even though you want to invest, and that's kind of how you start the process, you want to do your research. You want to invest wisely. You don't want to follow the herd, man. That's why Warren Buffett is so famous. Like, he's a contrarian. He does what everybody else isn't doing, right? If everybody's going this way, he goes this way. So that's what you want. But you have to go through the process, though. If you're fearful, another thing with our community too, like, and I love my people, but like, we do so much research without executing. Like, I talk to a lot of people all the time who have money, You know what I'm saying?
Right.
Like they build businesses, they do real estate and things of that nature. But for whatever reason, though, like they rather research a company, look at CNBC, look at Fox. Well, maybe not as much Fox Business as CNBC, but yeah, but they're looking at CNBC mostly. They're looking at Bloomberg, they're looking at Yahoo Finance, they're following stocks, looking at it. 2-3 years go by. Oh, I should have bought it here, but they don't buy like we do a lot of research. And I think society knocks us as a people that is not educated totally wrong. Like we do a lot of research, we just don't execute though. So like
Right.
you can do
Right.
all the research in the world, but until you download that investment app, until you pick up the phone, talk to a certified financial planner like myself, or fiduciary or financial advisor, place that trade, go to Robinhood, place that trade, go to our app, letbob.com, and start placing that trade and actually going through the process, you're in some trouble. So the one thing I would say is just doing it, executing it, going through the process. Because what's going to happen with anything, right? If we do good and we make money, we're going to continue to do it. It's like dating. Like if I have a great first date, I'm going to another date. If I have a horrible first date, not so much, right? You know what I'm saying?
Right.
So yeah, but you got to pick what good day you want to go on. So you got to do your research, but just don't research for 3 or 4 years, and then time flies by and you miss out.
Right, right, and I think that's a fair point. That analysis paralysis. We spend so much time doing analysis because we don't want to put ourselves in a risk where we don't do anything because we still weighing over the options. So I think it's interesting, that you said, we got to be ready to make moves. But I feel like I also think that people have to kind of get that kick in the ass. You know what I mean? To
Yeah,
really change your mind. Like if especially if you take the route where, if you got a traditional route or route that I come from where finances weren't discussed, it was common to live paycheck to paycheck. When income tax season came and we got tax refunds, I was like, yes, we're gonna go school shopping. We knew that income taxes was get a down payment on a new car or something that my parents probably really didn't need at the time. But I feel like at some point in time, when you come up, you're gonna get kicked in the ass some point financially that makes you say, what the hell am I doing? This is completely wrong. I don't want to live like this. This is crazy. And I tell you, I watched a TikTok video and it was called something like, how much is your car payment? And the lady would just go around her job and ask, hey, Bob, how much is your car payment? How much is your car payment? Dog, $1,300, $1,500,
Oh man,
$1,700. I was like,
no.
what kind of car you drive? A Ford Raptor, Dodge Hellcat. Like $1,500, you need a flying car. But I mean,
Facts.
it's just kind of those things where we have to get to a point where we realize, if I do this, people are going to think I'm a weirdo. Because once you go down the investing route, saving route, people are going to think you weirdo. People are going to think you cheap. Everybody in my family think I'm a cheapskate. And I am a cheapskate because I don't give them what the hell they asked for. But I do think you gotta kind of get that kick in the ass to push you to want to do something, whether it's save, whether it's the budget, whether it's to start investing. And so I know, and this is a question I got. We're going to take a little bit of a left turn here, right? But when I did videos about this on my channel, at some point I'm gonna go talk to a certified financial planner, right? But I essentially do everything on my own, right? And I talked about why I did everything on my own. The reason why I do most of my investments on my own is because you got to think of the background I come from. As a defense attorney, I carved out a niche of dealing with white collar crime. So I represented guys who had Ponzi schemes where they stole millions of dollars from retired
swindlers.
Yeah, I represented the worst of the worst. Then on the flip side, I've prosecuted and investigated the worst of the worst. I'm talking about CEOs of the biggest banks you can know. So a little bit of me is so jaded. A little bit of me is so jaded, and even talking to like financial and planners to kind of get that guidance because I've seen the worst of the worst. So explain to me, this is a question for me, and hopefully it could benefit people listening. What are the benefits of actually reaching out to a certified financial planner versus doing it on your own? And then talk about it from a standpoint of, a lot of people do the research. We know some of the information, but what are the advantages to it? And give us some of the data points, the statistics, if you got them. I know you got them in your pocket, so let me know.
Yeah. So of course, I mean, I'm just as honest as possible. I'm biased because I'm a certified financial planner, right? So I'm just as biased as I can be, but it's just facts. Like the average investor makes 3.2% a year over the past 20 years. And you can Google JP Morgan Guide to the Market. They do a great study every single quarter about the psychology of the investor, why we do the wrong thing. So think about it. For every $100, I make $3.20. The stock market over the same time frame made $9, right?
Right,
But we
right,
all invest in the stock market. That makes no sense. We invest in the stock market, but the stock market makes 3 times as much as we do. Why? Because we do the wrong thing. Like we always buy high and we sell low.
right,
Right. That's just human nature. We buy things, we see commercials, right? We buy things what everybody else is doing. It's a herd mentality, right? That's in your head. And most individuals can't get that out their head, right? Most individuals, unless it's a house, is going to see something that was worth $100 and now it's worth $50. They're going to say, I don't want to buy it right now. I want to wait, right? A house, a little bit something different because
right.
psychology, we think of houses different, which is crazy to think about. Whatever, though. You know what I'm saying? So for that reason, we are going to continue to do the wrong thing. So you need somebody to tap you on that shoulder, right? To say, hey, nah, man, nah. It's opposite. We want to buy it when it's at $50. So when it goes to 100, we double our money. Do you want to sell it at 100? When it goes back down to 75, you want to buy it then. So if you don't have that person on your shoulder, right, who's telling you what you really need to do, then you're screwed. You know what I'm saying?
Right,
So
right,
that's
right.
number one. Number two, a certified financial planner, he or she has so much knowledge about different areas. To be a CFP, you have to have a background in estate planning. You have to have a background when it comes to taxes. You have to have a background in retirement planning. You have to have a background in insurance and in investing. So you have like 5 subject matter experts all in one person, right? So you might know what you're doing from an investment standpoint. From a tax standpoint, do you? So how you are buying and selling your investments, it might be bad. You might have capital gains tax. If you had
Mm-hmm,
something for less
mm-hmm.
than a year, 25% capital gains tax compared to holding it for a year is
Right,
15%,
right,
right? You might have a dividend paying stock and you might be making 200, 300,000 a year and you're in a 38% tax bracket. That dividend paying stock might not be good because you're paying for every $100 in dividends, you're paying $28, $38. That doesn't make sense, right?
right.
So that's the reasons why. But with any, like I always tell my clients, like a doctor, I give you medicine, but you don't got to take my recommendations, right? So my medicine that I give you, if you say, hey, I understand Mario, but I want to do XYZ, we're gonna do XYZ. So at the end of the day, whatever you want to do with your money, you can tell your financial advisor, your certified financial planner, I don't want to do it like this, I want to do it like that, and he or she will oblige. So
Mm-hmm.
so it's good to have that person, and whatever fee he or she charges and that advice, I think is priceless. So that was a tangent, but definitely anybody and everybody, I definitely believe should have a financial advisor or a certified financial planner.
Yeah, I agree. I think that I'm actually going to do probably a vlog style thing where I go talk to somebody, not going to film the conversation, but kind of give the
Yeah,
feedback. It's just, when you come from a place of representing fraudsters in that area and then prosecuting them, you just
yeah,
kind of like, so,
yeah.
so
Nah, I feel yeah. And I
I'm a
always
little bit
say,
jaded.
yeah, and I always say it's always bad season every apple, man. Like it's just just like investments, right? It's great investments right now today. It's investments that's up like crazy for the year. You got a lot of investments that's down like crazy, right? So you want to make sure you do your research. You want to make sure you pick somebody. I'm complete referral based, so since it's always good to be referrals, I would recommend that you find a certified financial planner or financial advisor on YouTube or on on Instagram, or definitely not on TikTok, right? But you know what I'm saying? So you definitely want to ask, because typically if a person refers you, they trust them, they've had good dealings with them. So you definitely want to do your due diligence. But I would strongly recommend a person having a certified financial planner or financial advisor. It just helps. And again, you can't put a price on helping.
Right, right,
That's
right.
priceless.
Right, right. That's a fair point. I think that makes sense. And when I do have investment with, larger investment firms, and even though it's not my personal financial planner, you know how they have people who you can reach out to give you guidance on certain things and move. Only professional I keep and I want my own is my own tax professional. That's
Yeah.
kind of where I'm at right now. But I am thinking about the CFP thing, so I'm glad you shine some light on it because
Yeah.
it's. Would you say in that space as a CFP, most times, or would you say a lot of it is just controlling the emotions of your clients to react to the market? Because the market does something and we want to react. So would you say a big part of your job is kind of talking them back off the ledge, not to react to what the market or the current economic situation is doing?
Oh, heck yeah. The last 2 years, I'm saying between the COVID drop, and between what's going on this year. Now, I do have a competitive advantage. I know we're going to talk about it, but like, saying through our ETF and through our proprietary strategy we have in house, like, we got out a lot of our clients out the market in January, right? So the market was going down in October. We got out in January and early February. So a lot of the stock market losses that society has had, my clients have not had. So when they call freaking out, seeing, the news, whatever the case may be, or Instagram, this stock went down like crazy. Hey, am I losing money? No, you don't even got that stock. You know what I'm saying? We sold just stuff in January, February.
Right.
So it is a lot of that. But the good thing for us is that we have been able to get not all of our clients. And when we sell, depends. Like if you have a retirement account, ain't no taxes when you sell. If you got a non-retirement account, that's why you want a CFP to see, okay, if we sell, how's your tax liability going to be? We might
Right.
want to
Right.
hold it for longer so that you don't have as big of a tax liability. You know what I'm saying? So those are conversations that we have. So, but for new investors though, people who just starting, then yes, it's definitely kind of making sure that they don't panic, making sure that they continue to sell high and buy low and not do the opposite. For more seasoned investors, is really kind of helping them pick investments. Hey, what do you think about this? What do you think about that? They allow us to control most of the investments, but people got their play investments. I mean, I would say probably 85% of my clients is stocks that they call and say, how I want to do XYZ. Even if I don't recommend it, I say, hey, I don't think you should do it, but let's do it anyway. So you feel like you have some skin in the game because it is your money. You worked
Right.
hard for
Right.
it.
Right.
So it definitely depends on the person and their situation. But yeah, definitely COVID, that brief drop, and then of course what's going on this year. I definitely feel like more Dr. Phil than than years in the past. You know what I'm saying? But I
Right.
like
Right.
Dr. Phil. Ain't nobody said catch me outside. How about that? So I guess I'm doing a good job. You know what I'm saying?
Right, right. That's a good thing that nobody came at you like that. So that means you're doing a good job. So that was a good transition point, a good segue. Let's talk about your AI powered ETF that's on the
Yeah,
New York Stock Exchange, right? Like that's
yeah,
a well, I'll be honest. When I read your bio, I was like, God damn! I was like, like that's.
yeah,
I was like, man, I don't think people realize like I did some research. It is a process to go through that to get something like that open, and I
yeah,
thought it was also interesting that it's AI power, right? Because let's just think about it. And I'm a big data guy. I'm a big data analytics guy, and even from let's take I'm in investigations. That's kind of what I do: investigations and prosecutions, and I guess the easiest way to think about how amazing data analytics is hundreds of millions, probably billions of pieces of mail traveling through the post office on any given day to any given spot. So the
mm,
question is, man, like people probably think, how does the post office find out where illegal stuff is getting shipped in packages? There's not that
yeah,
many dogs in the world to smell everything. You
yeah,
can't have that many sniffing dogs to save your life. But
yeah.
it's funny because it's all data analytics. Everything that we do is data to support everything to find whatever you want. If you want to find a needle in the haystack and you got the right data points to use, you can parse all that hay out the way and find it. And so, that's
Mm,
the example I use. Like, if you want to find out what illegal is going through the mail, you don't have dogs just randomly sniffing stuff. You use data
right.
analytics. You look at something, for example, like, if I was going to pull out a data point, I would want to see, show me all packages going from a similar zip code A to zip code B, on a
Mm-hmm.
reoccurring basis that occurs every 3 weeks, every 2 weeks, and every 6 weeks. And
Yeah.
put that in, and then it'll just pop up. And then I can narrow it down. So I really understand the value of the data analytics. So explain a little bit about how your fund uses artificial intelligence to, make the right maneuvers, know when you should pull out of this particular thing or when you should go into it. Talk a little bit about that.
Yeah. Well, let me take a step back. I always like to say our fund. It's just not just me. Like we have a team. I have an investor that like the day-to-day operations. I'm not a part of. Like we have a team that does all that. So shouts out to everybody on the
And,
team.
and real quick, before you go on, let me give a caveat. We aren't promoting the investment into this particular fund. We are just asking questions about the process and how the fund works. So if you want to invest in the fund, that's unilaterally up to you. Or you can talk to your C.F.P. and they'll let you know what's up. All right, go ahead.
Yeah. Not. I mean, definitely Google let be LETB as a boys transparent. Like compared to what the market's doing this year. Oh man, what's going on? Oh, decline. All right, yeah, sorry about that. So yeah, the great thing about technology is that when somebody calls, it pops up on your iPhone. That's crazy. Hold on, tell me. That's crazy. Anyways, though, but like I was saying, compared to the benchmark what we have is the Russell 2000. Like we're definitely not down as much as everybody else. So just great, and definitely past performance does not guarantee future results. You know what I'm saying? But yeah, so back to our ETF Let Be. So strategy is proprietary, so I can't get too much in the weeds, but
Right, right.
as easy as it sounds, right? We are able to identify stocks when they're low. If we buy low and sell high, the thought process is you're always going to make money, right? You might have some trades that might not do as good. You might get out a little bit too early. It might bounce up more. But the name of the game of investing is buying low and selling high. So if we consistently able to get you in companies at a low point and then get you out when it's high, you're consistently going to make money. If we continue to do that, when the market's doing good and when the market's doing bad, you're going to outperform the market. And that's why this year, if you Google our ETF Let Be, you see what we've done for the year compared to the Russell and the NASDAQ. It's just crazy, right?
Right, right,
Uh,
right.
so, uh, so, so yeah, so literally like that, that's what we do from an automation standpoint. Again, the founder of a company, Bob Anthony, he has a tech background. Like he's
Right,
done
right, right, right.
years and years and years of tech projects that kind of got him to the point where he's able to look at investment charts, look at companies and strategize. And by strategizing and putting that to a fund and having things automated. So you think about a person at a job, right? We're working. It's 9:30. We see a stock is worth $100. Stuff happens. We're turning emails. We got a Zoom call. Now it's 1:30 and that stock ain't $100 anymore. Now that stock is worth $85. Man, I wish I would have sold it. Well, if it was automated, it would have sold at $100. And let's say it may have bought you back in at $88, right? Because when
Right,
it
right,
goes from
right.
85, 86, 87, 88, man, I need to buy it. Now it's 2:30. I got another Zoom call. I got something going on. It's 4 o'clock. The market's about to close. Now it's back up to 95. Boy, that was a whole crazy swing in one day, right? But from an automation standpoint, if you're able to get sold at 100 and then buy back at 88, that 12% loss you don't have. But
Right,
then
right.
that gain from 88 back to 100, that's 8%. But since you're on the upside, that's 11%. I mean, you've made 11% that day on the same stock. Now, we don't trade like that every single day constantly, but just to kind of give that example,
It's a concept.
since
Right, right.
since the everyday person is not looking at their stuff every single day, they don't know from a even if they do research from a macro standpoint what the market's doing, from micro standpoint what the sector's doing. Like we have so many data points that goes into what we have going on to make those decisions. So if we consistently get you into something before it goes down, before it goes up, get you out of it before it goes down, don't get you in, even though it might look like a buy, but something's going on that we don't know about, that you guys don't know about, but that we know about, that make sure that you don't invest before it goes down. Like we do
Right,
those things. And that's
right.
why we consistently outperform the market like we had when I was just doing it for my clients and my practice over the years. And now for the world, as our fund is on the exchange.
And I tell y'all, I think that's a dope that y'all using the data analytics to make those maneuvers. Because early on, when I very first started investing, I had this bright idea, and it was actually not a bad idea. I would watch some of the big Fortune 500 companies, the Home Depots and companies like that, and I would wait to see a drop that was 10%. If I saw a drop that was in that 7 to 10% range, I had a set amount of cash, and I'd be like, I'm gonna jump in with this set amount of cash. But the problem was, man, I had to watch that shit all day. I mean, I had it. I'm in class. I got the stock ticker up, and I'm trying to hurry up and do all the trades on my own because I didn't want to set it at like a stop loss because it may not ever reach to that point, but it could drop lower.
Yeah.
It was just such a pain in the ass. And when I went through that process, I said, you know what? I'm not doing this no more. I'm an ETF guy from here on out. So.
Yeah. And bruh, and think about it. So even with that stock going down by 10%, we don't know if it's going to go down another 5, 10, 15, or 20%. Right. We don't know. So it goes from 100 to 90. It might go from 90 to 70. Now you stuck at a 20% loss, right?
Right.
So again, on our end, through our investment app and through our ETF, if we're able to basically make sure that you don't buy it at 90, you wait to buy it at 70 or at 80.
Right.
That saves you money. So again, if we're saving money on the downturn, because as I said, almost over 80% of African Americans, if they lose money on their first trade, it takes them a year to invest again. So we talk about that generational wealth, right? That we're talking about eliminating the gap. Like that's it right there. Like if we're able to have you not make a mistake as a first-time investor, as an investor with not as much capital, so you don't want to lose it. You know what I'm saying?
Right.
If we're able to make sure you don't make that mistake, then as the market's going down, if you're not in that stock or in that market, you're not losing. So now we're able to invest at a lower price. It goes back up. We make more money. We're that much more happier. It's euphoria. If we're that much more happier, what we're going to do? Either going to buy some Jordans, hope we don't do that, or we're going to repeat, right? Yeah, because some people will take their money out, they're going to buy Balenciaga, Gucci, you know what I'm saying? They're going to turn up, you know what I'm saying? Hopefully, though, you're going to repeat, rewatch, and reinvest, do the whole same thing over and over again. So if you do that, then that's how we make compounded interest. That's how we, create wealth. That's how we grow our account. And over time, we continue to do that. We're in good shape. Also, from a consistency standpoint, I tell my clients, especially my clients who are sports people, right? Because some people don't like sports. Some people like sports. But yeah, so anybody in the East Coast, they know a guy named Jeremy Lin. Jeremy Lin was popping like fish grease for about half the season.
Linsanity, man. It was crazy.
Right. You said Melo was hurt. Him and Lala was beefing. You know what I'm saying? So he was like, man, look, I'm sitting on the bench. I got this going on with Lala. She on power right now. Everybody like her. I ain't trying to play basketball right now. And Linsanity, he went off like crazy for half a year, right? You heard from him again. He popped. He's like AMC. He's like Hertz last year. He's like GameStop, Bed Bath Beyond. Pop, you'll hear from him. Or Damian Lillard, right? You know what I'm saying? I want to be the Damian Lillard. So Damian Lillard, even though he's a hell of a basketball player, he gets overlooked by Steph Curry, but he's consistently top 5, top 10 every single year. If you consistently are at the top of a growth investment, if you consistently are making money, you're not popping where you're way, way better than everybody else, but then nobody hear from you for 5 or 10 years. Like you want to be consistent. So as we manage money, as I manage money, as the app grows, as the ETF is managing money, we want to be consistent. We don't want to just have this one stock like pops up like crazy and then we lose money. All the other times we want to be consistent. We consistently, maybe not the best. You might not get the best return, but you consistently have better returns. What's going to happen? You rise to the top, right?
Yeah.
And it's happening now. Again, since we came in February, you look at our performance compared to the market. It's crazy. It's crazy right now from a loss standpoint. So yeah. So as an investor, don't be Jeremy Lin. Shouts out to Jeremy Lin. You know what I'm saying? Great person. I heard he does great things for his community, but you want to be more like Damian Lillard, man. Even though you might not be the best investor, if you're consistent, you're consistently making money, you're consistently not losing, then you're going to win. And we all know Lillard's win. I mean, he had 2 max contracts, man. He was winning.
Right. So I think, and since we let's kind of flip it back to generational wealth, right? Because I think the most important thing in generational wealth is you got to prepare the next generation to get it. It's actually an interesting study out there. I don't know if you're familiar with this data point, but it says the data point is 70% of first generation millionaires who are made so generation one, I become a first generation millionaire. 70% of that wealth is lost the second generation. So
Whoa, yeah.
I couldn't believe the number was that high. I was like 70%. So I think the biggest thing when you're talking about generational wealth is the next generation got to be prepared to actually get that generational wealth, but also know what to do with it. So let me ask, hey, do you have children, brother?
Yeah, of course. Yeah, one
Okay,
daughter,
so
me and my wife here. Yeah.
so you and your wife got children. So let's kind of turn a little bit about, okay, you can set everything up on autopilot. You're probably gonna take the approach that I'm gonna take. I was like, man, I'm gonna put everything in a trust, and I'm gonna have it pay those kids so that principal stays. Let's talk
Yeah.
about what are the steps, or what are you doing to prepare, like, your kids? So what are some of the steps you're doing, or some of the steps you're going to take to prepare them so they can learn on the knowledge that you got, know what to do, have the habits of not being a consumer but being patient, being able to have delayed gratification, getting things when it's best for me to get them but not when I want them? Talk about that a little bit.
Yeah. So definitely have a trust, man. And I would strongly recommend anybody with assets. You're definitely looking to get in a trust. Now, a trust is more expensive than a will, but definitely able to dictate who gets the money, how they spend the money. So I would strongly recommend that you go through the process of getting the trust. Strongly recommend it. But yeah, for my daughter. So we're in Jacksonville, so it's not like Jacksonville was like the Jacksonville, Florida. It's not like we're the financial mecca of the world, you know what I'm saying? But we got some stuff going on. So anytime that we go places, I always like to kind of show her what wealth looks like, right? So I give an example. We go to Atlanta, we talk about how Atlanta is for our community, right? We go to the places where it was built by African Americans, as African American communities, because I want her to look at people like us. Because we watch TV, we look at success. It doesn't look like us on TV. So I definitely like to kind of show her, what success looks like from African American community. But when it comes to like the day-to-day operations, every day we do 15 minutes of stock market, right? She's 8 years old, so she watches Nickelodeon. She likes Justice. She likes stuff on YouTube. So the stuff that we like, that she likes, we look at the stock. Should I buy it? Should I sell it? Why should I buy it? Why should I sell it? It's a clothing line called Justice that she likes to wear.
I got a daughter who 11, bro. I know. I know about
yeah. So Justice went out of business. So we did a whole week synopsis of why Justice went out of business, why they closed down their stores, how much money they saved by closing down their stores. Now they're online, how much of a profit margin they have now, and how much percentage on the money that they have making more money because of them being online instead of in the store. So like, you think that's a lot for an 8-year-old, but like they can add, right? So yeah, some multiplication I do, but it teaches her, number one, entrepreneurship, teaches number two, everything I see on TV ain't glitz and glamour, because you think Justice is rocking and rolling, but really like they were in financial distress, right? So by doing those things, it allows her to understand money. So then as she gets older, maybe she wants to start her own clothing line. Okay, well, she knows what Justice did wrong and what Justice did right. So she ain't coming to daddy talking about, I want to open up a store. No, I want to open up a boutique online store, right?
Right.
Those are the things I do. For any parents, I recommend, have those conversations about stuff that they like and relate to. Like, she likes Roblox, she likes Minecraft. We look at Roblox stock once a week, right? And when it's down like crazy, we buy Roblox. When it's up, we sell it. So we're, trading, not day trading. We're using, weekly charts. But we're definitely trading the things that she likes. So she's understanding money. She understands that if I buy something high, I'm going to lose. So I want to wait until it goes down. So if you instill that information in them early and have them do it, they want to do it because of stuff that they like. So those are some of the things that I do to kind of help my daughter from a financial literacy standpoint.
Yeah, and I piggyback on that. We kind of have a finance Friday, and I'll be like, "Hey, I'm gonna quiz the kids." So my son, my daughter come in there, and I ask them, "What's the difference between a Roth IRA and an IRA? What is an ETF? What is a dividend? I kind of give them those quizzes, and it's dope. If you actually look on my channel, back when Roblox was about to drop their IPO, or shortly before, or shortly after they dropped it, me and my son did a video where he kind of gave an analysis of the Roblox stock, and I was so proud of him because at that point I think it was like $90, and I didn't understand it. I thought Roblox was just a stupid video game. Like,
me too.
Video game, and he explained to me all the other stuff that it could do. But it was dope because in that video, I said, so at $90, do you think Roblox is a buy? And he was like, nah. I looked at it. He said, I think a lot of people are, and it just common sense. He was like, I think a lot of people are in the house. A lot of people, due to the pandemic, people are playing it more. Kids, when people start going out, it's not going to be as many parents giving their kids money. He said, if I were to buy it, I think 60 would be a good point. And I lied to you that about 4 or 5 months ago, when it dropped to $60, I actually posted in my community. I was like, damn, little dude was right.
Yeah. And I'm pretty sure as a father, that probably made you feel good. Like, you know what I'm saying?
Yeah,
and for your son, that probably made him feel really good. You know what I'm saying? He telling daddy what to do, telling daddy how to invest. So that's helping him. And I imagine as he finds out more things that he likes, he's going to look at the stock, want to buy it. So you're showing him that entrepreneurial stock spirit. So as you talk about what we need to do from a generational wealth standpoint, like things of that's free, just having conversations and doing research helps kind of build that next generation.
Right. So, and let's talk a little bit about this comment right here. All right. Oh, let me see this. Oh, I'm missing it. Where is that? Okay. All right. I guess let's talk about this comment right here, right? Because this comment I feel like is always the gray area, and it's hard to balance. You got to really walk that tightrope, right? And I feel like for me, you know, I think every parent wants their kid to have better than what they had. You know what I mean? I can remember I went to my mother's house this weekend to do some yard work, and I said, you see where this area of grass in the backyard is flat? And my son was like, yeah. I said, you want to know why? I said, because I remember I got gassed up and I thought I was going to get a basketball court. So I came out, measured, and cut out a whole rectangle, dug it out with a shovel on my own to level it out. And I mean, I took 2x4 and set it up like you was going to come lay the cement down. I said, that's why I said, you want to know why it's flat? I said, because I ain't never get no damn basketball court. So I said, I ain't putting that dirt back. But one of the things we want to do as parents, we want to make sure our kids have more. So like my kids, man, their passport got so many stamps on it. You know, I didn't start going international till the first international trip I made was on Uncle Sam's dime.
Mine too.
And so one of the things is kind of finding that balance. And it's funny because, you know, my house is like the house where all of my kids' friends come over. My daughter and her dance friends, and my son and his skateboarding friends and everything. And he tells me all the time, but they'll tell me, they'd be like, Aaron, your parents are like the Cosbys. And I'd be like, no, I'm like, no, like, okay, you see a nice car out in the driveway, but that car is older than all of y'all. And when I bought it, I only paid $15K for it. That's the stuff that they don't see. They just see it with their eyes. Yeah. So in teaching those lessons, I feel like we got to really find that balance. And I don't know if you do this, but I told my son, I said, when you become a father, I don't know if all fathers do this, but I feel like Black fathers do this. And I say, when you become a father, you'll probably do the same thing to your son. Anytime my son has an experience that I didn't have, I got to give him the background story of how I didn't have that experience. For example, we go somewhere and I'd be like, oh man, you having a good time? I'd be like, okay, I was like, yeah, you got to be appreciative of these things, because when I was coming up, summer vacation was me going to grandma's house. So one of the things that I started doing now that this is his second summer of having a summer job, he has his own investment account that he's investing in consistently. I was proud of him. At 15, he got $1,000 in his emergency fund. And I was like, damn, dog, I was able to fight in the war before I had $1,000 saved up. and so, but I feel like it allows him to have some skin in the game because he's doing it with his own money. So it's two questions. Give us some quick tips, give us some quick tips or ideas to how do you keep that balance from, you want to give them more than what you have, but not spoil them. And then the next question after that I want you to talk about a little bit is, as a parent, and I actually put this and talked about this on the channel. Some people think it is, some people think it isn't. I think it's a thin line. Like, it's one thing to invest for our kids to go to school. It's another thing to invest for them. So there's a lot of YouTubers out there who got investment accounts for their kids, and like, I'm putting money in this account, so by the time they're 35, they could be a millionaire. Me, my son is 15. I was like, he got a summer job. I'm not investing a damn thing for him yet. I want him to use his own money to invest it so he can see what it does in the market. He can see the growth. And my hope is that by having him do this at 15, as he continues to do it, then if I want to make the determination to say, you know what, I'm going to help him out and I'm going to match what he's doing, I have that option to do that. But I always come from a standpoint of, I want you to cut your teeth and get some skin in the game first. So question number one, how do you walk that line from being spoiled, but also giving them more than what you had? And question number two, are you a proponent of investing for your kids to become financially free unilaterally without them doing anything?
Yeah. So let me tackle number two first. Like, so I am definitely a proponent of doing it. So I have a set amount that I put into my daughter's investment account on a month-to-month basis. We did that, since me and my wife brought her home, I'm saying, from the hospital. I've increased that over time. So yeah, I definitely do it. I'm saying, definitely when she turns 18, she's gonna be great. Now she can't get the money when she's 18 because, again, we have a trust. We have a trust. If you don't want to go through the process of getting the trust, you don't want to spend the money, you can do a custodial account. A custodial account is that where they can't get the money to the 18 or 21, or you can have the account in your name. It's their account, but if it's in your name, they can't touch it. And then whenever you're ready, you give it to them. You know what I'm saying? So you don't have to do a trust, but that's what I did. The reason why is because I just want to make sure, if SHIT hits the fan, like, she is good. You know what I'm saying? So definitely, how I invested her money, like, she's good now at 8 and she's gonna be great, you know what I'm saying, when she's 18.
Right.
Yeah, so that's just me. But she ain't gonna get the money when she's 18 though. I mean, she ain't gonna blow that bag, believe you me. So yeah.
And I think to that, because I know all the data points, and I think that's it. Whatever I do on the side that he don't have to know about, that's what I'm gonna do on the side. But I feel like at this stage, and then you also got to know who you're working with too. Now, my daughter, my son, he the type who he got to learn from trial and error. So I want to see him put skin in the game, and if he get his ass kicked and mess up, let him learn from that. My daughter, she learned from watching him make mistakes. So it also depends. I am investing for both of them, but at this stage right now, I kind of roll with, I got something set aside in my name for them. Let them start their own accounts, put their own money that they're earning in, their Christmas money in, because I want to see with what consistency that they're going to do that with. You know what I mean? I'm just kind of gauge them. I'm trying to find a data point. You know what I mean? But the numbers are out there. $1,500, a little over $1,500 from birth invested in an account that tracks the S&P 500 will have that child a millionaire at 65 if you never invest another thing.
That's
but
crazy.
If you wait till they graduate, it's about $9,000. So I mean, it's smart to do it and to do it sooner. But I think you do get some benefits from, you don't got to tell them every move. Let them learn. Let them put some skin in the game. Make some moves. So go ahead, hop on that next one. I know you're about to tackle that next question.
Yeah. That's compound interest. Like, the younger the better, man. So definitely right. But now, so the answer to your first question, I mean, you got to know your child. Like, if your child is a person that you think is a learner, that's not gonna be spoiled, is not gonna go through the process of you giving them $1 and they want $3, then do what you do. If it's a child that hey, I want to do it on my own, I'm okay, I don't need your help, you still want to kind of give that push. So it really just depends on your child. Like, so my daughter, saying, she's like, I'm woman, hear me roar. Like, I don't want your help, Dad, I don't need your help. Like, saying, if it's schoolwork, she don't want no help, even if she's busting her head not getting it. Like, she's just kind of strong-minded. So for a person like her, definitely I can help, but Why? Because she's gonna push me to the side anyways. So she want to do it herself. So it really just depends on your child. If you have a child, like I said, who loves being spoiled, you might not want to spoil them that much. But if you have a child that, you know, saying they want to do stuff on their own, then it's still good to kind of give them that push. So I hate to be a politician and give you a double answer, but I know you're in DC and everything, but you know what I'm saying? Like it really just depends on the child. It's really tough for me to kind of give an answer and be
Right,
and be
right, right.
honest about it. So
Yeah,
yeah.
yeah. No, I think that's a fair answer, and I mean I'm an attorney. 95% of my answers, it depends.
It depends.
so, so,
Yeah.
so I think that's a good answer. I think that's just one of the inherent struggles of being a parent and trying to teach a child anything. Because that's for me. That's one of the scariest things about being a parent. You can have two kids grow up in the same household, and one can become a doctor who's a financial genius, and the other one could be the exact freaking opposite. You know what I mean? It's just
Yeah.
people make
Hey,
their own decisions. But you go
yeah.
ahead, go ahead.
Yeah. My bad. So I'm looking at. I ain't been looking at the comments, man. So people been asking me all types of questions. So my apologies about the comments. So yeah. So my bad. Yeah. So it will comment right there, right? So what is my? So you want me to answer the questions, the comments, or how you want me to do
Yeah,
this?
you can
Because
go and
like I
answer
said,
them. Answer the one that's up on the
people been
screen.
commenting, asking questions. My bad. Asian American legal focus. Shouts out to you for asking the question. But so what's my favorite investments? Um, so it's two trains of thoughts. Like nothing against anybody, but I myself, I do not like mutual funds. So you have an ETF. An ETF is called exchange traded fund. It's like a mutual fund, but it's on the stock market. So typically those ETFs have less expenses than a mutual fund, have what you
Right,
call expense ratio. Those are hidden fees that you don't see. So ETFs work like mutual funds on the stock market, but they do have less fees. Um, I'm not a big fan of target date funds.
they the worst,
Yeah.
bro.
Facts.
I,
You know what I'm
I,
saying?
I'll tell you, I don't use them, and I see them up. They be like Target 2047. I be like, hell no.
Yeah. So yeah. Like it's the old fashioned thought about bonds. Like, I need to have my money in bonds. Like anybody in bonds today are kicking themselves in the foot. Like a bond is supposed to protect your bond's supposed to go up in value when the market goes down. Most bonds are down this year because of inflation, right? So I don't usually recommend people being in bonds. Like if you're conservative investing, we're going to do all conservative stock. We're going to do dividend paying stocks, dividend paying ETFs. If you're
Right,
more
right,
aggressive, then we ain't doing bonds anyway. So now I know right now, some of the I bonds are paying 8 to 9% for a year because inflation is high. Yeah, if you got some money in like a money market account and you can just put it somewhere for a year and not worry about it, that might be something to think about. Now, of course, you can only do up to $20,000, 10,000 if you're single, 20,000 in a joint household. So you can't put all your money in there, but that might be something to think about for short term. Because this time next year, I believe inflation ain't gonna be as high as it is. So as it re-ups, that I bond ain't gonna be 8 to 9% next year. So that could be a great way to sock away your money. But I like ETFs. Of course, I like our ETF, but then also just in as a whole, like I definitely recommend ETFs. They're diversified, and the good thing about ETFs as well, you could do sector ETFs. So
right.
like about a year and a half ago, the oil market was down like crazy. If a person had the crystal ball to invest in the oil market, they've almost doubled their money. Like oil is like XLE energy is up, you know what I'm saying, like 80, 85, 90% since late 2020. Crazy, right? So even though the market hasn't performed that well, 2021 it did, not 2022. So you can also identify different sectors of the economy and buy those ETFs, which is a pool of investments, and rock and roll that way. Um, so yeah, so that's my thing. And I included TD Ameritrade. So shouts out to Schwab. I am kind of Schwab because that's TD Ameritrade and Charles Schwab is merging. But yeah, man. I don't do mutual funds though. So nothing against mutual funds, but just mutual fund as a whole. Like um, I would not recommend it at all. Definitely not. Would recommend a target date fund. Would recommend a mutual fund. You want to do ETFs or single stocks if you do your research.
Right, right, right. And I tell you, when you talk about ETFs in different sectors, like I'm a dork, so like when the federal budget comes out, I actually read it. And I actually read the federal budget because I want to know what money is being spent on. But I also keep track. I'll say when they report them because they always report them late. But I also look at what our congressmen and women are investing in because
Man, Nancy Pelosi for the win.
Man, what? I was like, okay, Chuck Schumer, that's what we buying. Let's go.
Yeah,
So
yeah,
if they invest in something,
yeah.
my research might be a little light because I'm a jump. But
Yeah.
I looked at the budget a few years ago, and it was funny because I saw that there was a line item where essentially the federal government wants to change its entire fleet of vehicles to electric vehicles by like the year 2029 or something like that. Immediately when I saw that in the budget and this money allocated solely to that, I went and looked up and found an ETF, an exchange traded funds that don't make electric vehicles. They make all of the supporting components, the charging stations, the charging stations, the batteries, all of the stuff that the e-vehicles need. And I said, I'm gonna start investing in that because if this is where the federal government is going in the next 10 years, this is where everybody's going to be going. So I think that's a dope thing, with the funds. If you want to get some exposure in defense, you can get an ETF in defense. If you want to get exposure in electric vehicles or the tech sector. So that's definitely good advice, man. That's definitely good advice.
Yeah. And as we talk about investing, another thing for people that's more aggressive, now again, you want to do your research. I'm not recommending you guys do that, but for a person who wants more skin in the game from an investment standpoint, they have what you call leverage investments, right? If the market goes up by 1%, they go up by 2%. Triple leverage, very, very, very risky. So again, out of 100% portfolio, maybe 1%, but still they have some that the market goes up by 1%, you get 3%, right? So days where the market's rocking and rolling, you're up. Now, days like today, right, when the NASDAQ's down by 4%, if you got something that's triple the NASDAQ, you're down by 12% right now. Don't feel good. But as a new investor, if I was to buy it today at down 12%, when it gets back to where it was this morning, like you've made a 15% return because 12% down is 15% up, right? So if you want to be super aggressive, it is leverage investments. Again, a very, very small amount of your portfolio, but those are some things that you want to do besides like options, because people talk about options, about Forex, about day trading. That's just so risky. So if you want to be more risky with your investments, you probably want to look into the leverage ETFs where you're not going to wake up and lose all your money like you would an option. You wake up, lose all your money like in Forex. You might lose a lot of money, but not all. That would be something to do with a very, very small amount of your money if you want to be rocking and rolling and be more aggressive than just a regular index fund.
Hey, bro, we gonna close it out, but I do got one question for you. All right?
That's it, man. Okay, we rocking and rolling. No,
I got one more question for you. Then we're gonna see if anybody else got any questions, anything, go ahead, throw them in the chat now so we can get all the questions out. But we're talking. I think I could guess what your position is on this before I even ask it. But as a certified financial planner, okay, one. Do you invest in cryptocurrency?
Yes. Oh, heck, man, listen.
Okay.
Here,
okay. So go ahead.
Yeah. So listen, man. I know we look at Instagram, people making all this money, not making all this money. Who cares? Cryptocurrency is the future. The issue with cryptocurrency is that 98% of them are going to fail. And we should look at crypto like the dot-com era of 2002, 2003, right? 2002, 2003, 85 to 90% of the dot-com companies are no longer here, but we're on the internet right now, right? In 2002, do you think anybody thought that we could be on StreamYard or on Zoom having conversations? No, it evolved. It took 20 years, but it evolved. But the cream rose to the top. So, yes. So you definitely want to be in crypto, not all your money. Depending on your risk tolerance, 3, 5, no more than 10%, because you have your swings. But Bitcoin has done 15 times as good as the market since 2013. ETH has been up over 240% better than the market since 2017. I mean, it's not going to stop. It is the future. Now, what does the future look like in 5 years and 10 years? We do not know. But yes, definitely in crypto. I do nothing but Ethereum and Bitcoin, all the other coins because of their proof of stake or the jobs that they got going on. I don't trust. I'm not the cryptocurrency expert. I just
Right,
know
right,
what I
right,
know with those two, and I keep it moving. But I would strongly recommend anybody and everybody be in crypto. Not all your
right.
money,
Yeah,
no
I
more than
agree.
10% at the
I,
most. Uh, but
yeah,
yeah, but
I,
answer your question, man. I'm definitely in crypto, and that's the future.
I tell folks all the time. I say no more than 3 to 5% of my portfolio when I do my crypto updates. Bitcoin, ETH is my that's number one. That's a second generation crypto. Bitcoin, I invest in it, but I'm more of a Ethereum, Bitcoin, Ethereum, Cardano, then Bitcoin, and of course, I don't gamble in
Cardano.
Vegas. Yo, Cardano, yeah, Cardano is interesting. There's a third generation cryptocurrency. It's going to be interesting with ETH because they're going from proof of work to proof of stake. If
Yeah,
y'all don't
Web
know what that is,
2.0.
I got a video on that, but it's a way to use way less energy to validate the next information or so for such that's going to be on the chain. But I got this from reading the budget as well, and this is what made me say This is when I literally started investing in cryptocurrency. The very first stimulus checks that went around, if you look in the legislation, the original legislation had language in there where they were going to pay everyone their stimulus via a digital wallet. That was
Wow.
the original language in the legislation to pay everyone their stimulus via a digital wallet. And when I read that, I was like, oh man, I see where this is going. That was the day I actually started investing in cryptocurrency. And so I think it's going to be the big thing is with regulation. You know, I mean, I
Yes,
don't want to make this.
yes, yes.
I think the big thing with regulations, you got some of those free market guys like, I don't want regulation. I think regulation is going to benefit. It's going to do a few things. First of all, when you regulate the crypto market, you're going to get rid of a lot of these shit coins, scam coins that's coming out that go up real high, and then people
Yeah.
get burned and lose all of their money. You're going
Pump
to
and
wash
dump.
all those out.
Pump and
All
dump.
those,
Yeah.
yeah, all of those are going to get eliminated. But with the regulation, I think it's going to give people who are timid about investing in cryptocurrency more faith to invest in it because there is some type of government regulation. Because like right now, I did a video. You see a lot of the crypto brokers are filing for bankruptcy, and if you have your crypto on a brokerage, you're treated as an unsecured creditor, which is
Yeah. Yeah.
which is kind of wild. So I think federal regulation of the entire crypto market is going to benefit. We're going to lose a lot of trash coins, but for those
Yeah.
big wigs, those Ethereums, those Cardanos, those Bitcoins, those real coins that got some real utilization, I think it's going to make them pop big time. Yep, yep.
Yeah. Another thing to look at is like the big banks. So and you can do this when it comes to investing in crypto. Now, again, I use technical analysis. Personally, if I don't use, of course, I'll let Bob proprietary information to make a decision. But like, you can see from a charting standpoint, right? Like when to buy. Again, in my opinion, ETH and Bitcoin. But
Mm-hmm,
the
mm-hmm,
banks, when the banks buy up and the banks continue to buy crypto, more importantly, Bitcoin and ETH, you're going to see more regulation because the banks have all the money in the world to talk to the lobbyists. They tell the lobbyists what to do. The lobbyists tell Congress what to do, and it's done, right? So as we continue to see banks continue to buy and buy Bitcoin and buy ETH, like that's going to drive us. And then also think about like if we're able to go to Walmart and Walmart accepts Bitcoin, you think more people won't buy Bitcoin? Of course. So once it's more adoption from a corporate standpoint, and once there's
right.
regulation involved, once the government finds out how to tax it as well, it's huge. Like it's some conspiracy theorists now that's thinking that in 2021, why Bitcoin shot up so quick is because banks wanted that to happen. So when Bitcoin went from 66 down to 19, that is a huge discount. Most of the retail investors probably was not buying Bitcoin at 19. I'm pretty sure those large institutionals was, and
Right.
you can look on any bank's balance sheet again, do your research to see how much Bitcoin they own. Look at J.P. Morgan, look at Wells Fargo, look to see how much Bitcoin, because they own it. You know, what I'm saying, I want y'all to do your own research, but you know, they own a lot, and a lot of these same banks that 5-10 years ago that said Bitcoin was trash is buying it now because they see the power, they see the regulation, they see more people are going from paper to digital, and if they can regulate that, if they hold it, so think about 10 years from now, you know, because of all the craziness about a person stealing your Bitcoin, what if you can walk into your local bank and you can have Bitcoin there, right? So you have it in a FDIC secure, so can't nobody steal it. People will feel better about Bitcoin. More people are going to buy Bitcoin. So a lot of banks are buying up Bitcoin for that reason. I just got on a tangent, but definitely I would recommend a person getting into Bitcoin. Historically, it will do better than the market, but again, no more than 10% at the most, and that's somebody that's uber aggressive. But 3-5%. So yeah.
Dog, I saw a Bitcoin ATM machine in the gas station, and I was like, "What the hell is this?" I look like I was on a different planet. I'm over there touching it, trying to figure it out. I knew once I saw that, and once I saw BlackRock partnering with Coinbase, and I saw institutional investors trying to get involved with platforms to invest in cryptocurrency who got trillions of dollars. I was like, it's about to go crazy. Yeah. So hey, before we get out, go ahead, bro. You got something?
Yeah, nah. So again, companies, you might want to look at a company like Square, like Jack Dorsey, their CEO, is trying to not centralize Bitcoin, but make Bitcoin easier for purchasing power. So you know, we all use Square, right? We use Square when we swipe our credit cards. It all goes through Square, right? So again, if you're able to buy things with Bitcoin, right? It's going to change the game. So companies that are engulfed in Bitcoin, like the Square, that could be an investment opportunity that kind of grows over time. But yeah, definitely. I mean, look at Coinbase. Coinbase was tanking like crazy. Do we think that BlackRock, after now they get the internals of Coinbase, they might not just buy Coinbase? I mean, it's probably going to happen 1, 2, 3 years from now. So now you got one of the largest money managers in the world who now has the largest exchange of cryptocurrency. I mean, come in front of us, right? So man. Yeah, crypto is here to stay, man. It's just the trash is going to be washed out, but Bitcoin, Ethereum, I believe those two, they're going to be here 5, 10, 15, 20 years from now. And if we buy them today, you know, to the moon. Not recommending you do it though, but you know, as I put on my fiduciary hat.
Right. Yeah. Well, hey, folks. Hey, that's kind of it, man. Before we get out of here, man, if you got your social or anything you want to drop before we get out of here, man, go ahead and do it so the people can find you. I'm gonna make sure to include everything in the description box so y'all can go ahead and check him out. If y'all want to take a look at the fund and see what it's doing, I'm gonna make sure I add all that to the description box. So go ahead and bless the people with your info, bro.
Yeah. So very, very easy. So Tomes, TOAMS, basically teams with the O. So Tomes Financial, that's my Instagram, that's my link, my business Facebook, that's my Twitter. Tomes. I'm also on TikTok, Painful Profits. I won't talk about my show, but I have a show in a podcast called Painful Profits, PAYNEFUL Profits. It's pretty cool, man. I do, from a comedic standpoint, things about stocks, why stocks up, why it's down, but from comedic standpoints, we gotta understand. And then also I have a HBCU podcast that talks about and highlights people who went to HBCUs and graduated, what they're doing from a success standpoint. And that's Our Culture HBCU. Check that Instagram and TikTok out as well, man. So yeah, and then our fund, Let Bob. So the symbol is LETB. So Let Be. Bob stands for Black Owned Business. The website is letbob.com. You can find our investment platform there if you want to get rocking and rolling, and also our ETF. Where if you're a financial advisor, you're an influencer, you're a celebrity that you think you want to have your own fund on the market, we can actually help you go through that process from step A to Z and have you on the market yourself.
Dope, man. Hey, I appreciate you coming in, brother. I may have to loop you in, man, because I got a show idea that'll be fun. It's called Bad Financial Advice I Seen on TikTok.
Let's do it, man. Let's do it. Look. You get the legal.
I seen some of the stuff.
Legal. Yeah, so you go ahead. You get the legal way, and I do the financial way, man. So
I saw some of the stuff on there, and I was like, These people going to prison. Yo, I appreciate you coming on, brother. You always welcome. I'll make sure to put your info in the description box. Hey, for everybody in the chat, everybody who viewed, I appreciate y'all. Y'all take care. Have a good one. Be blessed. Peace.
Yeah.